Buying a home can be scary and intimidating, but that's only because most first-time home buyers don't fully understand all the steps and the process. So today in this video, I'm going to give you the 10 steps that you need to know if you're a first-time home buyer. Now, before we get into this list, I'd like to share a few things. Purchasing a house is not an easy decision to make. This is actually one of the most important financial decisions that most Americans will make in their entire lives. I know what you're going through because we went through the same thing the first time we went through this process. Also, I'm a licensed real estate agent, and we help people buy, sell, and invest in real estate here in the Fort Wayne area. After we go through this list, if you have any other questions that I may not have covered in this video, feel free to reach out. There's even a link to my calendar where you can pick out a time that's most convenient to you, because trust me, when you're about to make that decision on which loan product that you want to use or how much of a down payment and how's that going to affect the total price of my mortgage, you really want to get all the concrete answers, and we'd be more than happy to help. With that being said, let's jump right into it. The first step of buying a home for a first-time home buyer is to start with financial planning. In your financial planning, you want to take a look at 3 things: your savings, income, and credit score. Well, that's all based on the purchase price of the house. It can be as low as 3%, but you can go all the way up to 20%. So we'd like to start planning around about 5% of what you think that you're going to buy. So if it's a $200,000 house, you want to plan to save about $10,000 for a down payment. Now keep in mind, there are down payment assistance programs that are out there that you may be eligible for. But in this planning step, you want to plan for not having the DPA just in case you don't get it. You still may have to pay some closing costs. This is the title recording fees, lender fees, prepaid costs. There's a couple of costs that vary between each deal depending on how it goes. So those things can average somewhere between $2,000 to $4,000. So we want to allocate savings towards that. Next, you want to take a look at your income. Now, if you're on salary, you already know how much you make annually. So it's a little bit easier to bring that down to your monthly cost. So just take your salary and divide that by 12. That's going to give you your monthly cost. And we're going to use your monthly income to help calculate your DTI. Now, if you're on hourly wages, it'd be a little bit more difficult, but multiply your hourly wages by the average amount of hours that you work and then come up with your monthly income. Before we get into DTI a little further, let's talk about credit score. People's credit score is probably one of the other most confusing things about the loan process. Everybody knows that they have a credit score, and everybody, for the most part, is monitoring their credit score through some website, either Credit Karma or Credit Wise or something like that. But I think the one thing that most people do not know is that there are different credit rating systems. So there's a FICO 5, 4, and 2. The FICO 5, 4, and 2 is the FICO score that most lenders use when they pull your credit for a mortgage application. A lot of people don't know that because you have another FICO system for credit cards. There's another FICO system for auto loans. So when people say, I know my credit score, I think the question of what's your credit score is kind of a misnomer, right? What I should really ask you and what you should be thinking about is, what are my credit scores pertaining to which scoring system? So my scores with Equifax, TransUnion, and Experian with my FICO 5, 4, and 2. I always recommend to my clients to go to myfico.com or myFICO app, and it's one of the best tools if you're looking to go through a mortgage application. I highly recommend that you download that. From your credit report, you'll get your revolving credit line. So if you have a car note, any student loans, any credit cards, you're going to add up all those debts and minus it from your monthly income. Now that you have a better idea of what your DTI is, that's going to give you a better idea of about how much the bank will approve you for your principal mortgage. Step number 2, hire a realtor. Now, when you're looking for a realtor, you want to look for someone who specializes with helping first-time home buyers. Not all realtors are the same. Some people only work referrals. Some people only work with luxury sellers. Some people work investment properties. You see what I'm saying? So there are a lot of different types of realtors that specialize in different things. A realtor that works with first-time home buyers, they have the time to walk you through the process, and they have the knowledge of all the programs and lenders that may be able to help you. For example, some clients are nurses, and there are programs out there for nurses, firefighters, and police officers. Some clients are veterans. You see what I'm saying? Some people are first-time home buyers that are eligible for the First Step program here in Indiana. So everyone is different. So if you're working with a real estate agent that works with first-time home buyers, they are aware of everything that first-time home buyers are eligible for. In my personal experience, it's always better to have an advocate on your side that can give you recommendations and advice as you move through the process. If you do not have an agent, a lot of times you may proceed forward and unknowingly miss out on certain benefits or things that you were eligible for that you did not know of. As you proceed through this process, you'll realize that the listing agent, even though they are selling the house, they represent the seller and they can't advocate for you as well as you having your own representation. That would be like going to court and having one lawyer for the defense and the prosecution. If you're having trouble finding a realtor, I have a contact form down low. You can just put your information in, the city that you live in, and we can help you find a realtor that best fits you and your family. Before we get into step 3, if we haven't met yet, my name is knowedials. I'm a licensed real estate agent in Fort Wayne, Indiana. Me and my wife, Francesca, we help people move to, from, and around Fort Wayne. If you have any questions about anything we went over today or anything else, my contact information is below. Feel free to reach out. I even have a link to my calendar. That way you can pick out a time that works best for you. Because trust me, when you're going through this process, there's just so many questions and there's so much nuance for each different client. I think it's easier to sit down and have that one-on-one, and we'd be happy to help. So step number 3 is getting pre-approved. Now you can go to any lender. I'm pretty sure you can go online and find a lender that will be happy to run that mortgage application. So you've already done steps 1 and 2. You know what your credit score is. You know what you're looking to spend. Now you just need to pick a lender. If you don't have a lender in mind, feel free to ask your agents. They will have the knowledge of the different local lenders and national lenders that'll be able to help you, because everyone is different. During the buyer's consultation, your real estate agent is going to get a lot of information from you. So as I alluded to earlier, maybe you're a nurse, and here in the state of Indiana, they have a program specifically for nurses to help them purchase houses. So that real estate agent will point you in the direction of the lender that participates with that program. There are 3 different main loans. You've got your FHA loan, your VA loan, and your USDA loan. Now, all banks do those 3 loans, but there's also local grants and programs, especially here in Allen County where I live, and realtors will be aware of any special incentives that certain credit unions or mortgage lenders have. Just so you're prepared for the mortgage applications, the documents you'll need, they're going to ask for 1 month of pay stubs, 2 years worth of W-2s, 2 years of tax returns, and your 2 most recent bank statements. After that, they're going to do a credit pull. Now, after they do the credit pull, you still have the opportunity to shop around, and I highly recommend that you do so. You can go to as many banks as you want, or lenders or credit unions, to apply for mortgage applications to see who's going to give you the better deal. You have 45 days to do multiple mortgage applications, because the credit bureaus understand that you should have the ability to shop around for the best loan. So this is the time in which you're going to shop around, pick 1 or 2 lenders, maybe 3 or 4, put in 4 applications and see who can give you the best offer. Step number 4, house hunting. Now, what we found works best is making a needs and wants list. On the column on the left, you have the needs list and write everything that you must have. If you have a large family, more rooms is probably a must, right? The pool, maybe not so much. You're going to need to reference that list later as you begin shopping through homes. You'll save homes, you'll search through the internet, your realtor will find homes for you, they're going to send you homes, and then you're going to match those homes and the prices with that list. And that's going to really help you find the right home. Step number 5, make an offer. Now, before we get into this, I want to share a few things. Your real estate agent, this is where their experience really shines, right? Because they're going to give you their advice. This could be a situation where we're in multiple offer situations. It could be a situation that the neighborhood that you're looking to move in is a lucrative neighborhood. Like, that person's knowledge of the market is really going to help you make a decision on what to offer and how much to offer, because it's not just about the price. That real estate agent, for example, I could tell you a story where we just had a listing that was on the market for 1 day. There was a bunch of appointments throughout the day. Half of those real estate agents gave us an email or a call and told us that they were interested and they were going to write an offer. So we knew a few offers were coming in. One of the other real estate agents did not call us, did not tell us, and so they just wrote an offer, right? And so obviously, we respond that we received the offer and that we would be making a decision by the following day in the afternoon. Now, that response really shocked that realtor, because they didn't think there were other offers on the table. And then they said, oh, there's other offers, meaning they didn't even think that there were other offers because the home had only been on the market for 1 day. So that communication probably cost their client, because I'm sure if they knew there were other offers on the table, they would have advised them, okay, there's other offers on the table, you might have to go in a little stronger with this. And that's just one example. There's so many examples. There's so many different things. And again, this is why we recommend doing a consultation. Like I said, you can go to my calendar and pick out a time that works best for you. If this is one of the things that you're worried about, we can go over some of the strategies that we use to help our buyers win in multiple bid situations. Once the offer is made, there's 3 options from there. The seller will either accept, counter, or reject. Now keep in mind that other offers can come in during this period. If they respond to your initial offer with a counter, there could still be other offers on the table. So time is kind of the essence in this particular case. Now the rejection part is a little nuanced, because on your offer, your initial purchase agreement, the rejection is a little nuanced. So when you put in an offer, I believe it's on page 8 here in Indiana, there's a time for the seller to respond. So they can reject it, that's the formal way to do it, or they could just let your purchase agreement time out, and that is basically a de facto rejection. So you may not get a rejection, just want to throw that out there. Step number 6. Once you have an accepted offer, you're going to move right into ordering that home inspection. Now, this is one of the tips that I give to every single client, every single time. I always recommend a inspection unless you're buying the property as is. But even if you're purchasing the property as is, a lot of people don't think of this, but you still want to have the inspection if it's an as is, because in the as is addendum, it says that the seller will not make any repairs as long as there's no major defects. So you won't know if there's major defects if you don't have the inspection. So even if you're purchasing a house as is, you still have the inspection. And even if the seller doesn't fix anything else, well, at least now you know it's basically given a physical on the property. So in all cases, I recommend an inspection. Unless you're an investor and you're coming in and you're gonna completely rehab the place, I would still have the inspection. And lastly, get a homeowner's insurance policy. I'm pretty sure all of you have seen the commercials, bundle your home and auto, Geico, State Farm, Progressive. Pretty much this is the time that I do recommend people to get multiple quotes. If you have car insurance, which I'm pretty sure you do, you might want to bundle it with your current auto insurance policy, or you might want to look into someone else and then move your auto policy over to the new home insurance policy. Step number 7, negotiate repairs. Now this one's pretty straightforward. I always advise my buyers that anything that comes back on the inspection report, if it's supposed to work properly, I would ask the seller to fix that. But if it's something cosmetic, maybe the flooring is, maybe the trim is nicked or something like that, or you don't like the color of the living room, that's more cosmetic, I would not ask for that from the seller. Also keep in mind, when you're buying new construction, most people think, oh, it's a new construction home, I don't need to have a home inspection because it's brand new. I've never had an inspection come back without something being wrong, new construction included. The new construction, they have something called a punch out list. And during that particular point in time, when the builders were building that, just say the house, there's mistakes that are made. And so that's the period where you go in. Usually if it's a new construction, you have a 1-year warranty. Well, they will repaint something, or if the counter is nicked, if they, broke one of the cabinets or something like that, they will replace it. Window seals is a big one in new construction. Like, you want to open up all the windows, because if somebody installed one of the windows incorrectly, right, it may not open correctly, or it's stuck or something like that. So you still want to have that inspection. You actually can get more from the builder with the home inspection than you would from a regular seller, which you would only be asking for anything that doesn't function properly, if that makes sense. Step number 8, order the appraisal. Now the appraisal will be ordered by the bank. Now this actually protects the bank and not you. The bank is basically verifying that the contractual sales price, that the value of the land is at least that much, or the value of the property is at least that much, because they're not going to loan out money on a property that isn't worth that much. So the appraised value can either come in at the sales price, above the sales price, or below the sales price. If it comes in at or above, you're good. If it comes in below, then you're gonna have to go back to negotiations. So let's just say the house is $200,000, but the appraised value is $190,000. That means the buyer will have to bring $10,000 out of their pocket so they may want to renegotiate with the seller to do something, maybe seller concessions or lower the price or something like that. There's one thing I want to point out at this particular point, and this goes back to making an offer. So your realtor, this is high level, when you put in an offer, let's just say the house is $200,000, you can put in an offer for $400,000, right? That's twice the price. But everybody knows that the house will not appraise for that amount. So there's something called an appraisal gap addendum. So if somebody really wants a house, and this happens a lot in the bigger markets, it actually happened across America. Like the competition for houses were so fierce that people were putting in offers above the appraised value. So let's just say in this case, the house is $200,000. And in the purchase agreement, they said that we're going to give an appraisal gap of 20 grand. So if the appraisal comes back at, 205,000, there's a gap of about 15. So that appraisal gap will cover it. So if there's no appraisal gap on the front end, there will have to be renegotiations, or the contract will be voided. Step number 9, the final walkthrough. I think a lot of people don't think about the final walkthrough. Once you get through 90% of the transaction, you're almost at the end. I recommend doing the final walkthrough the day before, and here's why. Everything has been agreed to on paper. There's been repairs made, maybe there hasn't been repairs made, but most of the time the seller is moving out of the property. So you want to verify that they haven't left any trash behind or anything in the garage or any boxes in the attic. I can't tell you how many times there's been a final walkthrough and we've had to call the other side, the seller, say, hey, listen, there's still some stuff left behind, you guys, can you come pick it up or something like that. But also it's a good opportunity to over the house, because many times when you first walk through the house during the showing, the furniture was still there, let's just say, or the house was staged. During the final walkthrough, the house will be empty. And so you're going to see the house almost, like naked, right? It's going to look different, right? And you may notice things that you didn't notice before, but you definitely want to look around the house and just make sure there's anything that doesn't stand out. Like maybe there's a security system that you didn't notice before that you didn't get the code to, or maybe they have like a secret safe and there's a combination. Like it could be all kind of weird things. But when you do the final walkthrough, you're definitely going to see some things, and you're going to ask them on the day of closing when you see the seller, or you can ask your realtor to contact the listing agent, and they'll ask the seller some of the questions that you may have after you do the final walkthrough. Step number 10, closing. Now, this step is also important. You're going to get your closing disclosure. You're going to get your disclosures from the bank. You need to review those disclosures and make sure that everything is correctly. This actually happened to us not that long ago. My buyer was going over their closing disclosures, and the bank, they were off by over like 10 grand of how much money he needed to bring to close. So this is where you want to look at cash to close. How much money do I need to close? So if there was a down payment amount of 3% or 5%, you want to clarify how are the funds going to be transferred. Usually it's going to be by wire. So you can start that transfer the day before closing or the day of. Closings usually take about 30 minutes, but if there's going to be a holdup, it's going to be a holdup with the wire transfer. So I always recommend that people do the wire transfer the day before, because on the day of, that final document, they cannot be signed at the closing table until the wire has been confirmed to be received. But you want to look at your closing disclosure and make sure that cash to close, everything, all the numbers are correct. Now that you know the 10 steps of buying a home for first-time home buyers, check out my last video where I talk about the Google data center that's coming here to Fort Wayne, and I'll see you there.